California's insurance industry will be playing a key role in some of those new routes that Chase was just talking about. This recovery effort goes on, but the question is whether insurance companies and the state will have the ability to cover these insurance claims now and into the future. Let's bring in insurance expert Karl Susman, who has some answers to all this. Karl, great to have you back. It's been such a really wild ride in the insurance world, especially after these fires. I hope you were well through them, and it's great to have you now.
Thank you. It's definitely been a roller coaster like I've never seen before.
Yeah, I know that, and that's saying something because you've seen it all and you absolutely have this way of speaking about it too. So let's just start by talking about this FAIR plan, which we have talked about in the past, the insurer of last resort. And people immediately notice this is going to be on the hook, it's going to be undercapitalized, on the hook for more than it can pay out. And today, now there's this announcement about $1 billion bailout. I mean, talk about how that works and what it means for other insurance companies and the insurance marketplace in California.
Well, it's interesting because the California FAIR Plan is actually run by and funded by private insurance companies. It's not a state organization. There's no tax dollars in it. So the premium that's going into it is policyholders. And when there's not enough premium, then the insurance companies in California put more money in. Now, we already know that there's issues with FAIR Plan being underfunded because you've been hearing about that since the first day of the fire. It's estimated that FAIR Plan has about 25% of all of the exposure in both of these large fires, the Eaton fire and the Palisades fire. So in order for them to be able to have enough money to pay these claims, they have to go to their insurance, which is called reinsurance. Reinsurance is something that the FAIR Plan has to have access to more cash. The only issue is that reinsurance has, you could look at it like a deductible. So before they can have access to that, FAIR Plan has to have, I believe it was about $900 million paid, and then they have access to almost $6 billion. So what's happening now is the FAIR Plan is assessing all of the admitted insurance companies in the state of California to pay that $1 billion. They will then have access to that reinsurance, and fortunately, that is scheduled to be more than sufficient to pay for all of the claims that FAIR Plan has exposure on.
But it also means, doesn't it, Karl, that it's just another way in which these private insurance companies may view operating in California to some degree hostilely and having to constantly pay in, their premiums being set at a rate that doesn't support their private enterprise for profit. I mean, it's an uncomfortable tension point for us in California. I think you told us recently that California pays the 10th lowest premiums on average of the entire country, and that may be because we have an insurance company who's elected, who's also working on keeping these premiums lower. So just talk about how all this works out with the mechanics of the insurance market and what it might mean for the future of insurance.
Well, it's exactly to your point. We're so inexpensive. We're so underpriced for what the actual risk is. There's only so much money coming in. So when there's a large disaster like this, there's clearly not going to be enough money to pay the claims. So it's really just a matter of, are we going to pay the actual risk that we have on an ongoing basis, or are we going to have carriers leave California and the few that remain charging premiums that are knowingly insufficient to stay afloat, insufficient to pay claims? Just look at State Farm. And then when there is a large event, they have to get the money from somewhere. So they're going to go back to FAIR Plan, or they're going to go back to policyholders. It's really just a matter of, do you want to pay a little bit as you're going, or do you want to wait and just get a big bill at the end of the day when the next fire comes?
So give us that context and apply it to what we see with State Farm asking permission to have about an average of a 22% rate increase for homeowners. And if I'm not mistaken, there's already a pending request for a 30% rate increase. I mean, I don't know if this is cumulative or one's replacing the other. You can speak to that. But people see this and they get alarmed. But in some sense, this needs to happen or else these insurers simply won't stay.
Well, you're right. State Farm 6 months ago put in an emergency request to have an emergency money put in, basically. They had to open up their books to the Department of Insurance, and they straight out said, we need this rate increase or we are insolvent. We will not be able to pay our claims. Now, you would think that dire strait situation would mean the department would quickly say, okay, fine, take your rate increase, but it's still pending. It actually didn't happen. Now we have the fires come along. State Farm was very aggressive in writing insurance in areas that most other insurance companies did not write, and they tended to write larger homes in those areas. So they really got the 1-2 punch because they have risks that most companies said, that's too much of an exposure, that needs to go to the FAIR Plan, and they would say, no, we'll take it. And they tended to be larger homes. So now they have that prior filing where they need money just to stay afloat. And now they're coming back to the Department of Insurance and saying, by the way, if you want us to be able to stay put, we're going to need additional rate because we need to be able to refill the coffers for the next fire that we know is coming.
Yeah, I mean, Karl, and you probably watched this press briefing on the Wednesday or Thursday of the week of the fires, where President Biden was sitting there and VP Harris was sitting there and others were talking about all aspects of this. And VP Harris was sort of sitting at the table as a Californian in the room saying, we have to have a conversation about insurance. And it's all the stuff that you think about all the time, we talk about when we talk to you. But also she seemed to be suggesting, especially sitting there with national leaders and federal officials, about this conversation of what else can we do? Because you're talking about all the tensions in it. State Farm, they get slapped on the wrist for taking risk and insuring people that other people won't, and now they're asking to get a rate increase and they can't get it. So all these competing incentives don't work out for the insurance policy. Is there something that can happen on a federal level? Or if not, what is the simplistic solution to this tension that we have?
Well, I think with the current administration, I would not look for there to be a federal solution. Even though Adam Schiff had proposed a bill a year or two ago about a type of federal reinsurance, I don't think we're going to see that coming anytime soon. But as far as on the state level, I think what finally has to happen is we sort of have to have a come to you-know-what moment where we say, you know what, we have been underpaying for the true exposure that we have. And for a period of time, it might work. But now when we're having these large events happen, and you and I both know sitting here, this is not the last wildfire we're going to see. This is not the last event like this. And now that we realize that these are going to continue happening, they're happening every 3-4 years, we have to realize that paying for the actual risk has to happen. The money has to come from somewhere. If it's not going to come from our premiums, it's going to come from a surcharge later. So the best thing that we can do is try and create an environment where we have more companies that are writing coverage to spread that risk out. That's what we would like to see. We would like to see the risk spread between more insurance companies so they'll have enough money to pay the claims and potentially not have to go to the FAIR plan and potentially therefore not need to have a surcharge to recoup money that they didn't have.
It's all about creating the right set of incentives for these private companies so we can figure out some kind of governmental add-on to it. And it feels like the FAIR plan was some sort of attempted solve. And as we see, it also has its pain points. It's a huge conversation, especially as our heart continues to go out to those folks who are underinsured, without insurance, couldn't get insurance. They're watching us talk saying, yeah, but what about us too? You're talking about bringing the insurance companies in, how about us? It's fascinating, Karl. Thank you so much for speaking to it so well. Much more to talk to you about. Hope to do it again sometime soon.
Thanks again.
Thank you so much. Karl Susman, insurance expert, as you can see, talking about the different dynamics in what will be a huge conversation, part of the rebuild for years to come.